So I just came back from a scale workshop with Alex Harmozy, and I met an attorney there. Very great attorney, doing great in their business, high gross income revenue, and very high profit. And as a matter of fact, she tells me, Boris, my husband runs operations. And she's like, what do you do, Boris? I said, hey, I help millionaires keep their millions instead of giving it to the IRS. She's like, oh, Boris, I just wrote a check for $225,000 to the IRS for the last 2 years. I am definitely paying a lot of money in taxes, and I think I want your help. Anyways, that wasn't the inspiration to make this video for all the attorneys out there. And in this video, I'm going to break down the 3 most effective tax strategies that you as an attorney can use in your business, and what I have used for my attorney clients that help them save up to $100,000 or even more by just using these 3 top tax strategies. So enjoy this video. And let's get started. Hey, thanks so much for watching this video on my YouTube channel. My name is Boris Musheyev. I'm a CPA and a tax strategist. Every week, I release a tax strategy video here on YouTube. For you, the profitable business owner, my goal is to completely simplify this tax strategy so that you can understand it. At the same time, you're able to go ahead and implement this tax strategy, or at least take it to your accountant so he can implement it for you. But if you don't have a tax advisor, you gotta get yourself a tax advisor. So these tax strategies could be implemented for you in your business. Thank you so much. Don't forget to subscribe if you love the video. Let's go ahead and start saving you money on taxes. All right, awesome. Let's get into it. The top 3 tax strategies that you as an attorney can use in your business to save up to $100,000 or even more in your business. Now, strategy number 1 that we're going to cover is compensation package. You as an attorney can actually restructure compensation for yourself and your spouse, if your spouse works in your business, to significantly save money on taxes. The second thing is that if you are that attorney that also owns a building in which your law firm operates, this could be a huge nugget, a treasure, gold treasure, whatever you want to call it. This is called a self-rental tax strategy, and I'm going to talk about that in a lot of detail as well. And the third one is if you have a 401k in your business, then I'm going to show you how you can actually combine it together with what's called a profit sharing and defined benefit plan to absolutely maximize your retirement contributions and really save big on taxes. All right, let's get started with the first tax strategy, which is the compensation package. If you are an attorney that has their business as an S-corporation, then the salary that you're taking out from the business can be restructured. Now, if you don't have an S-corporation for your law firm, I definitely recommend getting one because it will absolutely save you a lot of money on taxes. Now, what do I mean by that? Every attorney has to pay themselves a reasonable compensation. Now, a lot of attorneys, they write themselves out a check for a W-2 salary as an attorney, but IRS says that you have to pay yourself a reasonable compensation for the duties that you perform in your business. So in your law firm, you're probably not only an attorney, but you're also a paralegal. Right? You're also doing administrative work, maybe some sales and some marketing. So you're not 100% attorney, you're about 50% of the time an attorney. And the other 50%, you do all of those things. So what we do for our attorney clients is that we take their salary, we bring it down from being 100% attorney to a 50% attorney and everything else. And that what allows that to do for us and for them is to lower their salary, which means they will pay less Social Security and Medicare taxes. Same goes with your spouse. If you have a spouse that's working in your law firm, a lot of attorneys pay their spouse whatever they think that spouse should get paid. And that's totally cool with me. But what we have found that a lot of times attorneys and business owners in the same situation, they overpay their spouse. And in most cases, we've actually reduced the spouse's salary by 50%. Of course, we have a backup for it to prove that, but whatever the spouse is doing, it is not the same amount that they're getting paid. And in most cases, that's because you may have not been educated properly by your accountant what to do in these scenarios. And you know, if you don't have a tax advisor and somebody who's tax planning for you, you should get yourself a tax advisor right away. So what do we do for our attorney clients as well is that we reduce the salary for the spouse. So number one, we restructure the owner's compensation, the owner's salary, we reduce the spouse's salary. And if you pay for health insurance for yourself and for your employees, what happens is that, especially if you're an S-corporation owner, you can qualify for for what's called a self-employed health insurance deduction. Even though you've got employees and even though you're paying for their health insurance, you add that health insurance not only on your W-2, not only to reduce your taxable wages, but also to reduce down your Social Security and Medicare wages. You can do this for your spouse, and you can do this even if you pay for the health insurance for your children. All of that can be part of your W-2, not only reducing your taxable wages, okay? It's also reducing your Social Security and Medicare wages. So after this video, pick up your account and be like, hey, I pay for health insurance, right? Yes. Is it part of my W-2? Yes. Is it reducing my Social Security and Medicare wages? If the answer is no, fire them. Okay, maybe not that extreme. All right, so just these three things, very easily, something that can be implemented right away, could potentially save you $12,000 to $18,000. I know it has saved tons of our clients this amount of money by just restructuring these little things. Now, the second thing that we're going to get into is self-rental, and we're going to do this right after this break. Hey, thank you so much for watching this YouTube video. Very quickly, if your business is making $1 million and plus, then you can save $100,000 or even more on your taxes. I put together a free training for you to learn how you can save $100,000 or more on your taxes if your business is making more than $1 million. The link is in the description below, or you can simply go to www.save100know.com. Again, save100know.com, or simply below the video, there is a link. Click on that, enjoy that free training, and start saving hundreds of thousands of dollars on your taxes. All right, cool. Welcome back. Let's talk about this strategy as self-rental. If you are that attorney that owns a building in which your law firm operates, this could be a huge tax strategy for you. Now, let's take a step back for a second and let me explain this strategy for you. If you have not had your business in that building that you own, the LLC or whatever that may be, it could be a commercial property or residential property. If your rental property produces a loss, technically speaking, or in general, you can't take those losses because they are considered passive losses. So you cannot deduct them on your tax return if you're actively participating in your business. And if you're an attorney watching this video, I'm guessing you are actively participating in your law practice, and so is your spouse. So the losses generated by that rental property or commercial building or whatever that may be are not tax deductible unless you are operating your business in this separate LLC or in that building. Now, what happens is that you're probably paying rent from your S-corporation, and I'm assuming you may be an S-corporation because most of the attorneys that I know are an S-corporation. If not, speak to your tax advisor and become an S-corp. Now, back to us. So you're probably paying rent for this LLC. Now, what happens is that IRS says, look, if you're operating your business in the property that you own in that building, you can group these two transactions under Code Section 469. What that allows you to do is that this LLC in which your building is located is going to have a loss. And mainly, it's going to have what's called a paper loss. And that's going to happen from the depreciation. And on top of that, you can add another tax strategy, which is called cost segregation, which allows you to accelerate your depreciation. Now, this loss typically, it is not tax deductible, but because your business is operating in the same property that you own, this loss now going to be combined together, what's called, if we use the IRS term, it's called grouped together with your S corporation under Code Section 469, and you would have to make an election on the tax return and attach a statement. So your accountant, hopefully you have a good accountant that would know that. And what happens is that this loss will now be deductible against your S corporation profit. So if you are a seven-figure attorney that makes millions of dollars and has millions of dollars in profit, this could be a huge tax strategy for you. We've seen average savings anywhere between $20,000 to $30,000 in just taxes saved. Again, you don't have to spend money to use this tax strategy. It's a very simple tax strategy, kind of like you have to know how to prepare a tax return and know a tax code to be able to implement this. So definitely speak to your tax advisor. If you're that attorney that operates in a building which your law firm is in, speak to your tax advisor about grouping these two activities together. All right, now let's move on to a retirement plan that you can again combine profit sharing and defined benefit plan, but right after this break. Hey, thank you so much for watching my YouTube video. Just a quick commercial break. If you like what you see, please like the video. As a matter of fact, share it on your YouTube so that you can help other business owners to save money on taxes. I would also appreciate it very much if you subscribe to my video. If you like, share, or subscribe, it really helps me with YouTube algorithm, where YouTube will really push this video to other business owners and they can learn how to save money on taxes using simple tax strategies that I teach with my whiteboard strategy. Thank you so much, and let's get back to the video. Okay, welcome back. Now let's talk about a third tax strategy that could save you big on taxes, and that is a retirement plan that is combined together with a profit sharing and defined benefit plan. Now, if you have a 401k in your business, I'm not sure if you know this, but you can actually, without doing anything, put away up to $23,500 into your 401k. That is a deferral from your paycheck. Remember, this is part of that strategy where you do compensation package. Now, let's say like Boris, I've got a lot of money, a lot of cash coming in, and I want to be able to put away a lot more money. So what you can do is speak to your financial advisor, but together with your tax advisor, okay? You definitely need a tax advisor for this, so do all the proper calculations for you. Now, what happens is that they can open up what's called a defined benefit plan that has a profit sharing plan in it. Now, how it works is that with a 401k, you can do $23,500. With a profit sharing plan, you can actually max out your 401k at $70,000. Again, we're assuming that you're under the age of 50. If you are over the age of 50 and watching this video, great, your contributions are actually higher, okay? So $70,000. Now with defined benefit plan, your retirement contributions combined together could be $225,000 or even more. So I actually pulled out a real life example for a 37-year-old individual, and his contributions are $125,000 into defined benefit. So altogether, it's about $225,000. Then he can put away into his retirement. Entire thing is 100% tax deduction. If you have a spouse in your business that is helping you in your business, you can do exact same strategy for your spouse, and this $225,000 contribution could be double that, which is $450,000. Mind-boggling, right? Now, there is some caveat to it. If you do have employees, you have to contribute into the profit sharing for your employees as well. So this is a live example. For this client, we actually have a requirement to put away $50,000 into the employee's account as well. So you might be thinking, oh, that is too much money I'm going to have to put away for employees. That is great question, and that is a good thinking, but let's do savings, right? So if we have $225,000 in this particular client situation, again, your situation may be different, times 2, that's $450,000 in contributions, plus 50, that's $500,000 write-off at 37% tax, federal tax bracket. That's $185,000 in taxes saved. So would you pay $50,000 into your employee's account to save $185,000? Most of my clients say yes to that. All right. So these are the top 3 tax strategies that you can use in your business, in your law firm, to start saving a lot more money on taxes. But again, if you do proper tax planning with your tax advisor, and I hope that you do have a tax advisor and a tax planner, somebody that you work together with, because by doing proper tax planning and really being proactive, doing it throughout the year and not at the end of the year, not hoping that after you finish filing your taxes that you somehow miraculously will save money on taxes, because remember, hope is not a tax strategy. Get yourself a tax advisor, and I hope that this video was super helpful to you. Thanks so much.